If you're a US investor, US equity markets are starting to look a little bit more rosy. We're on a decent roll. We're back. We bounced quite strongly off the earlier lows. But if you're a European investor, the picture looks very different. How do I think about this? How are you thinking about this? And do you think this equity market rally's got legs?
Well, I do think that the equity markets are looking a bit frothy, Guy, because, since April, we have bounced hard, as you mentioned. And if you look at the earnings yield on the S&P 500, you get about 425. So, and if you look at the 10-year yield, we are just doing about 428 at the moment, I think. So the equity risk premium is kind of mildly negative. When investors were similarly enthusiastic about equities, that was back in 2000, 1999, 2000, before the dot-com bubble burst. And of course, the equity risk premium was deeply negative then. It's not so deeply negative now. So my fear is that equities run up a bit more from here. But I think that valuations do matter in the long run. The markets are basically saying that, look, inflation doesn't matter. Tariffs don't matter. The slowdown in the economy doesn't matter. Nothing really matters except that equity valuations keep going higher and higher, even with the dollar on the back foot and treasuries on the back foot. So we have got this exceptionalism playing out weirdly, where US stocks are pretty much insulated from everything else that's happening with US markets. So I don't think that posturing can go on for long. And I think that a correction will be, the markets are setting themselves up for a correction sooner rather than later. This movie isn't going to end well.
Ven, what's your view on FX here? Is anyone arguing for the bull case for the US dollar?
Well, at the moment, the US dollar is trading at a deep discount, but I think that, that discount has got further to go. And particularly, I think that the euro, I'm bullish on the euro because, there are a few other currencies that are better placed to transform that US dollar weakness and reflect it out as strength. The ECB, as you know, they're already at 2%, and they're probably going to cut rates once more. That is well factored into the market, but they are not going to go into below the neutral territory, into accommodative territory. I don't think that's their plan. So the ECB is going to be one of the major central banks that gets to its terminal rate first. Not Canada, not the UK, and the Bank of Japan is dragging its feet, of course, on raising rates. So I think that, and you've also got the current account, the Eurozone is a net external creditor to the rest of the world, which means that its current account surpluses add a factor of buoyancy to the currency. And I think that, which is why I'm fairly bullish on the euro going forward, even though it's kind of overvalued mildly.
Ven, fold your views on continued weaker US dollar into your views on gold. Is this as good as it gets for the yellow metal at 3,300?
Well, I think that, it is, the gains are appearing a bit stretched at this point because, there is one way to value gold, which is to look at it as a deep discount bond. And if you derive its value thereof, it's about $3,070 per ounce. We are higher than that. So I think there is a risk of a correction looming, perhaps just beyond the short term.